Hello, Tim Kerin here from Mortgage Choice in Kingsley. Today I want to talk about age and its relationship with whether or not you can get a loan. A question I get quite a lot, particularly from older clients. The older you get, the more likely it is, I guess in my experience, that you're going to ask me this question, is I am X years old and therefore a bank won't lend to me, right? I'm too old to get a loan. The answer almost invariably is no. It actually doesn't come down to that. It used to, but the way the rules work these days is lenders aren't actually allowed to discriminate on age, is how I would probably phrase it. However, they are required by the laws to demonstrate a reasonable exit strategy. And what that means is we need to show that by the time you reach retirement age, and that's a bit grey, lenders have different definitions of retirement age because it's not clear in the law what it should be, but whatever they think is reasonable, which can depend on what you do for a living. If you're doing something with manual labour in it, they're going to probably use a lower retirement age than if you're desk bound, for example. Whenever you reach retirement age, there needs to be a reasonable strategy to be able to put you in a situation where at retirement age you no longer have any owner-occupied debt. And as long as we can justify that reasonably within the bank's parameters, then they're quite happy to lend you the money. And that applies even if you've already retired. Now, some lenders are not lending to you if you've retired, and that's just a commercial decision they're making, but it's certainly not against the rules for them to do so. So there's many ways to show that that works. One is to make the argument that when I get to retirement in X years, I will have this much in super based on the contributions I've been making, and some lenders will allow you to make the argument based on the growth of the super as well. I'll have this much left on my loan based on the minimum payments in the loan contract. I'll be able to take this much out of my super and pay off what's left of my loan, and I'll still have this much in super. Lender goes, okay, no worries, we've met our requirements to demonstrate an exit strategy. So that's quite a simple one. Or it might be that regardless of super, by the time you reach retirement age, there's enough equity in your home that you would be able to downsize, sell the home, buy something less expensive, buy something smaller, and use that difference in value to pay off what's left of the debt. Those are the two most common ones. Another one might be when I get to retirement age, I would sell my investment property and use the profit I made from that, the equity that I realise, the gain I realise when I sell that and pay off its debt, to pay off what's left of my home loan. So there's quite a few different ways. And basically what I've experienced with customers is if you feel comfortable, if a reasonable person feels comfortable borrowing money heading into retirement, 5, 10, 15 years from retirement or post-retirement, they think it's a good idea. Usually there's a reasonable explanation as to how we are going to be able to demonstrate an exit strategy. Usually there's a way to do it. It's very rare for there not to be a way. It's very rare for me to say to somebody, I'm sorry, we can't demonstrate an exit strategy. This is not going to work. That happens once in a blue moon. Overwhelmingly more often, the answer is yes. What you believe is reasonable, I can actually argue to a bank is reasonable as well. So don't go around thinking that if you're thinking I'm getting on a bit, I'm old, then don't go around thinking that that's going to stop you from getting a home loan. Check with me. Maybe it will. Maybe the situation you're in means we can't demonstrate an exit strategy, but what I tend to find is most of the time we can. So we should definitely talk about it. I hope that helps. Thanks very much.